Good morning, everybody. Welcome to today's presentation on advanced techniques for order flow trading. And again, a shout out to the people at Investors Expos, for setting this all up. And I'm always excited to do these presentations for you guys because the market is so dynamic. And as we saw, just today and yesterday, the Fed raised rates, 50 basis points as expected. The market rallied, but today it's all crashing back down to reality. And some people will get discouraged thinking, oh my gosh, the market is rigged, or they're out there to steal your money. Well, that's not really the case, right? I mean, markets move based off of people's perceptions of what's going to be happening in the future. And what happened yesterday and what's happening today is a perfect example. And so today, what I'll be explaining, and I'll be using today and yesterday as examples, is how to trade with the big players and profit from their moves. Because at the end of the day, the people that move the market, are the big players, right? They have the money behind them to buy or sell, which then builds on itself, and the markets will go up or the markets will go down. And I'm going to teach you how to how to read market sentiment so you can anticipate those price changes, right? It's not always about just following along. You get to this point where, based on what you're seeing in the market, you've seen it over and over. Markets are fractal, um, and you just see that what looks like the exact same pattern or exact same buying pressure or selling pressure in the market over and over. And you're going to learn how to see that, because after you start seeing that, you're going to learn how to anticipate when price is going to move up or move down. And it's a bit like driving a car, right? The first time you get behind the wheel of the car, you don't know, the flow of traffic or anything. You're not used to it. But as you drive more and more, you become used to reading the flow of traffic, right? And knowing when to stay in your lane, knowing when to pass the car in front of you, and avoiding accidents. And that's the same thing when it comes to trading. And the important thing about trading is you have to stay ahead of your competitors by knowing what's happening right now in the market, because at the end of the day, what's happening right now, this instant, is more important than what happened yesterday, right? You saw, for example, yesterday with the Fed announcement, everyone was expecting the Fed to do it, and they did it. Okay, but then once they did it, everyone's perception starts changing. I mean, it's one thing to think they're going to do it. It's like asking a girl out. Oh yeah, you sit there and you think, I'm going to ask this girl out, she's going to say yes, but then you never do it, right? And the same thing, with the market. People like to sit there and armchair quarterback. Everyone is an expert nowadays. In the days of social media, everyone thinks they know what's right and what's wrong. But when you're in the heat of the moment, that's when you got to make decisions. And the best way to make decisions is by gaining an edge over the other traders in the market. And last thing, I'm going to show you guys a high probability trading setup that you could use basically today or tomorrow. If you have it on your software, a lot of trading software out there has what I'm going to teach you. And if not, I'm going to show you where you can get it from. And as a special treat, if you stick to the end, I'm going to show you how to get a copy of my book, Trading Order Flow. And this is a book that I wrote several years ago, about 2015. It feels like several years ago, but it's you'll get the PDF. You're not going to get a hardcover copy, and it talks about order flow and trading in general. It's a great read, and it's sort of one of my contributions back to the trading world. So those of you that are new to one of my presentations, just a quick brief on who I am. My name is Michael Valtos, and I've been in the futures trading industry for over 25 years. I started on the CME floor with Dean Witter. I started as a runner, right, which is the lowest level that you can start off in the futures industry. I mean, nowadays we don't have a trading floor, so you can't start off as a runner. Now, unfortunately, to start in the business, you have to have like a college degree with a certain background, in programming or in mathematics, but not everybody does. However, the nice thing is the barrier to entry to trading for yourself has dropped a lot. I mean, now you could open an account for just, a few $1,000s. Commissions are very low, And it's almost as good as the old days of being on the floor with what people were paying um, in terms of rates. I mean, it's not as good, but it's good enough. So after I left the floor, I joined EDF Man, the big English trading company in Chicago. After that, Commerzbank as the Eurex trader. I traded Bunds, Bobbles, Schatz. Then after 9/11, I took some time off and sort of toured around the world. Went to go Southeast Asia, and eventually I wanted to get back in the industry. I joined Cargill, right, the big commodity trading company. I was based in Chicago, and I worked on the futures trading desk there. And eventually they sent me out to Singapore to set up a trading desk when the floor of the Cymex exchange, the SGX exchange, was closing down and going fully electronic. And I did that for about a year. Then I joined JP Morgan in Singapore, where I was vice president of futures trading. And I left there in about 2013 because I was just tired of the grind of working for another person. I know how to trade. I could do it for myself, and I wanted to do more in life. And that's when I started writing my book on trading order flows. Now, in 2015, I started a software company called Order Flows. And the reason I'm just talking about this now is because the software that is used in this presentation, the tools that I use in this presentation, are generated from my software. But the reason why I created the Order Flows Trader is because the software that was out there, wasn't necessarily built by traders. It was sort of built by programmers where they would just see things out there on the market and try to use it. But coming from the trading background, I know what I like to look for in the order flow, and I said, you know what, the software should do some of this analysis for me, make my life as a trader easier. Okay, so that's how I sort of got into, I sort of fell backwards into the software business because originally it was just for my own personal use, but then I was sharing charts with other traders, and they're like, hey, what software is this? I'm like, well, it's my own. And they're like, well, can I get a copy? And eventually, enough people was asking that, said, you know what, maybe, maybe people really are interested in the software. So again, the software tools that I use in this training are generated from my software. But what I'm showing you can be used if you're using, other trading software. TradingView is starting to add many of these tools. Sarah Charts has them. Um, Quant Tower, a lot of the software out there has them. I think mine is the easiest to use. But you're going to see how quickly and easily you can apply order flow analysis to your trading. And, again, people ask me, why do you do this? Shouldn't you just concentrate on trading? Yeah, I should. But, at the same time, I like to work with other traders because I like to see people improve themselves, and you can see, other people are saying about the software, it's very helpful because they can clearly see now what's really happening in the market. All right, so before I jump in, just a brief disclaimer, we're all adults here. Trading involves risk. So, you know, big money, right? This is what you call big money. It's not real, but in this case, I wish $100 bills were that big. But when people think of the terms big money, really what you're thinking of is the big players in the market, right? So if you could see where the big players are buying and selling in the market, do you think it would be worth it to you to trade in the same direction? This is just yesterday on Bloomberg. Commodity traders make record profits, right? They still want to bail out, some of these firms. It's interesting because I think Shell Oil, people, just think of, these oil companies as, you know, hedgers or, users of oil. Actually, they do a lot of prop trading as well. Goldman Sachs always, record profits. They make the news once in a while. Oh, profits are down. So instead of $2.5 billion, they make, $1.5 billion, but they still make a lot of money. So if you could see the direction and see what these guys are doing and know how to read it in the market, that's something that should be very, very useful to you as a trader. Now, there is a way to see what they're doing, and that's by watching the order flow. And really, what is order flow? It's volume traded at price. And this is an order flow chart. Okay, this is what they call a footprint. Now, there's different ways to look at order flow. You could look at order flow from a footprint chart, which is what this is. You can look at it from the DOM, the depth of market, because that shows the bids and the offers that are going in, the limits, below the market, the limits above the market, orders that are pulled. People say, well, technically that's order flow. Well, It's not real trades though. What you're looking on a footprint chart actually traded, right? It shows people's commitment to the markets, right? If you know, just think of it yourself, right? If you sell 10 shares of Apple, well, you have a vested interest in wanting to see Apple go down. You're committed to that trade, right? Just like if you buy Tesla, you buy the Tesla stock, you're expecting the market to go up, right? That's why you buy and sell things. And the same thing, in futures, whether people are buy or sell E-minis, mini Dow, NASDAQ, corn, wheat, soybeans, palm oil, whatever, once they get into a trade, they're committed to the market. You know, we could place orders all day long below the bid, above the offer, but if it doesn't trade there, we don't care if the market goes up or down the rest of the day. You know, if this market is trading, 42.40, yeah, I'd love to sell it at 42.45 when we're trading 5 points lower in case the market spikes up or something like that. But I'm not going to get filled at 42.45 when the market's trading 42.40. So and that's one of the limitations of looking at the depth of market, of looking at, the resting liquidity. It does provide insights into certain aspects, but, basing your trading on it is, sort of basing your trading on whims. Whereas when people are actually committed to the market, when people have taken a trade, it shows up in the volume and it shows their commitment. The more that they buy or sell, the stronger their commitment. Now, if you're looking at a normal bar chart, right, or candlestick chart, all you're really looking at is the open, the high, the low, and the close. You're not seeing what volume traded at price. You're not seeing if there was heavy volume or light volume. You're not seeing if price was accepted or price was rejected. All you're seeing is the open, high, low, and close. And even that leaves a lot to be desired as well. Because, you know, where the market opens, especially if you're using a time-based chart, it's generally going to be where the previous bar closed, right? I mean, if you're using a 1 minute chart, market opens, market closes at 60 seconds and the next bar opens right there. Okay, that's one of your data points on a candlestick chart. Your high or low, people like to, judge the high or low on a candlestick chart, for certain patterns, but that's actually the area that the least amount of volume generally trades. And the close, okay, close actually is sometimes arbitrary, right? Again, based on time, when time expired, okay, that's where the market closed. So, that's some of the drawbacks of just looking at a normal price-based chart. So many trading strategies are based on the premise that future prices are determined by past prices. However, when you're looking at the order flow, it's based on the premise that future prices are determined by the buying and selling pressure in the market right now. So really, what is order flow trading? Well, it's about trading based off of what the other traders are doing right now. People love to use moving averages. Okay. Well, the problem with that is what happened 50 bars ago, say it's a 50 period moving average, 50 bars ago, 49 bars ago, 48 bars ago, is affecting your decision right now. What you really want to be doing is concentrating your decision off of what's happening right now. So for example, like yesterday, 1 o'clock, Fed announcement, market moved. Okay, do you think what happened if you're using a moving average, a 200 period moving average, a 50 moving average, do you think what happened at 8:30 in the morning, 9 o'clock in the morning, 10 o'clock in the morning is going to be affecting the market right now? No, it's not going to have any effect because now everyone's perception has changed based off of an external event. Okay, now order flow trading can be used in any market, but it's especially useful in markets that have centralized price data. Futures is an example, right? There's one exchange, well, more than one exchange, but the data gets routed through the one exchange and disseminated to the rest of the world. Markets like Forex, okay, there's not one centralized exchange, so you're getting data from different banks and different sources, right? So there's always going to be some discrepancies. Even to a certain extent, crypto, there's 400 crypto markets out there, but if you stick with the big ones, obviously, Coinbase, Binance, get your data from there. It's pretty representative of the overall market. stocks, if you're trading the big stocks, obviously, you could have good data sources available for that as well. So by using information about order flow, traders can get a feel for the direction of the market and make better trading decisions. Now, this is this morning here in E-minis. And if you're looking at the candlesticks, again, what information is the chart really giving you? It's telling you where the bar opened and closed, the high and the low, but it's not giving you much more information. You don't know if prices were accepted up here or rejected. You don't know, you don't understand, you just see the market starting to trade down, and then you just, okay, well, yeah, I got two red bars, maybe I should go with it. Well, if you had two red bars here and you went with it, it just reversed back up. Just like you had two green bars here, and then it reversed. Two green, two red, two green again. Then it fell over, right? Shouldn't this be rallying? But it doesn't really give you much information in terms of traders' actual intentions in the market. Now, the footprint chart gives you a lot of information, right? It's going to tell you where the volume traded the most in a bar, right? That's going to be your point of control. It's going to tell you, where aggressive buyers or aggressive sellers in control of the bar, right? That's going to appear in the delta, right? So if you have positive delta, aggressive buyers were in control. If you have negative delta, aggressive sellers were in control of the bar. So that's going to tell you if the market is in balance or out of balance. If it's in balance, you're just going to have your normal order flow going through. If it's out of balance, you're going to see buying imbalances or selling imbalances. And that's going to be highlighted actually by in the volume in the bar, right? Buying imbalances would be blue, selling imbalances would be red. Okay, so again, this is the footprint chart for this bar chart. Okay, so what can I get from here? Well, I know that we were going sideways. It looked like we were sort of poking higher. Market traded a decent amount of volume up here around the 42.50, 51 area, but it rejected that value, that volume up here, started trading down. And then it broke down pretty quick. As it was breaking down, I could see aggressive sellers right through the delta were getting stronger, minus 183. So it's telling me aggressive sellers outnumbered aggressive buyers by 183 in this bar since it's negative. Then minus 502 in the next bar, minus 700. So I know that now, instead of buyers and sellers being roughly evenly matched, sellers are coming in, more sellers are coming in, and even more sellers are coming in because it's growing. Whereas when you're going sideways, you see relatively smallish delta numbers, 98, negative 74, positive 76, 89. But now it's picked a side, right? Traders have picked a side and they're looking to get short. And this is while the market was still trading, around 42.40, 42.30. Where's that now? 41 something. So let me ask you, right? This is yesterday before the Fed announcement. But this was a great example, right? This market had been trending up. Okay, then it sort of comes up here. You got to ask yourself, what would you do? Right? You always got to be asking yourself, what would you do when the market's going up? Are you going to get ready to sell, or are you going to stay long, or get long and or add on more to your long position? Well, the market fell over, right? And it basically retraced that whole move up back down here. But if you're looking up in here, was there really any reason to sell on a normal bar chart? Not really. I mean, you could be stretching and say, well, yeah, you had 3 red candles, 4 red candles. Um, this is not really a rejection bar or anything in terms of candlestick patterns, which I know people love candlestick patterns because, it takes things and tries to make it give some very colorful explanation as to the pattern. But, it's not particularly bearish. Even this bar right here is kind of a bullish candlestick pattern. But if you're looking at the order flow, what you're seeing in here was very bearish as you're coming up here, right? As you're coming up, you're seeing nice positive deltas. It even was getting stronger, 38, 537, 1078, the strongest delta right here, 1078. But then the next bar, it decreases 172. So it's dropped about 80% in terms of volume. Then the next bar is just 17. So imagine you're rallying up, right? And as the market rallies, it feeds on itself, right? That's what rallies do, right? They're higher prices attract more buyers until the last buyer has bought or sold. And that's what you're seeing up here is the last buyer has bought. They're not interested really in buying it anymore because instead of going higher with stronger positive delta, it's just going sideways with weaker positive delta. So it's showing signs of weakness up here, right up here, as you just hit the high and then you go sideways through these two bars. And then obviously this bar right here, big negative delta. So the sellers came in now. Now, what are the clues are there? The point of control, right? The point of control is the area with the most volume in a bar. And, in a basic sense, it's thought of as sort of the fair value for that bar. So now you got the fair value of the bar starting to move down, right? You have it sort of peaking right here in this red candle. Then the next candle is lower. Obviously, the next candle is lower as well. Lower, you know, 2 ticks higher, and then lower again. And even in this bar, right, you've got, what was that, 7 selling imbalances, okay? But really what you're looking at is a market that's transitioning from aggressive buying to aggressive selling. Buyers were interested. Buyers were here on this move up. But then as you sort of peaked out, the buyers took a step back, but they didn't have any more bullets left, so to speak, right? They didn't have any more buying interest up here. And the market petered out, couldn't even go any higher than this high. And once you remove that buying pressure from the market, right, because the buying and selling, right, is generally pretty even. But what drives markets is when you have more buying, aggressive buying than aggressive selling. And that's what moves markets up. So if you have aggressive buying and the market's still moving up, but it's getting lesser, what do you think is going to happen? Well, eventually it's going to stop. It's like when you drive your car, right? You take your foot off the accelerator, eventually the car stops, and that's the end of it, right? Just like here, the buyers were here, they're interested, but they took their foot off the accelerator, so to speak. Now, in this case, you still got selling pressure going on because, every buyer, there's a seller, and the sellers took over and drove the market back down. Now, one of the most important concepts for traders to understand is the relationship between price and value. Now, in general, price is a function of value, but the relationship between the two is complex. Okay, people often misconstrue price for value, and it's different, right? Think of it, if you ever watched those shows, I don't know if it's still on anymore. American Pickers. The guys go out in the countryside and go buy antiques. And then at the end of the show, like, oh, I made $5,000 because I bought this sign for $1,000, but I'm going to value it at $5,000. Well, that's not really the real value. The real value is going to be when someone buys it, right? And you can put a price on something, but it doesn't make it what it's worth, right? It's really what it's worth is when it sells, right? Or someone buys it. Okay. Just like the whole Beanie Baby thing, people, oh, Beanie Babies, this one's worth $3,000 or something. Well, no, it's worth $5 unless someone pays you $3,000 for it. Now, once you understand that price and value are two different things, start thinking of it in market terms. So in a trending or breakout environment, right? A market that's trending or starting, a breakout would usually be the beginning of a trend. Price is going to lead value in general, okay? Price is searching for a new level at which two-sided trading can resume. Now, in a rotational environment, value is containing price. So as price starts to move away from value, it will come back, okay? And how do we see this in the order flow? Well, most of us traders, we've heard of the term market profile or volume profile, okay? What the value area is in market profile terms, volume profile terms, is where I said 70, it's actually 70% of the bar's volume traded over a predetermined period of time. So for example, right, today, right? S&Ps. I took this chart going back from the beginning of the day. You can see how the profile was looking up until about 9 o'clock, right? Now this is a volume profile. It's not a market profile. Very similar. Now that's one way to look at a volume profile. Now, sort of the newer ways over the last 20 years is you can sort of break it down on shorter time frames. So this is a 1 minute chart with a 15-minute profile overlaid over it, right? And so you can see how the bars are moving, how the individual price is moving on a minute by minute basis in relation to the volume profile that's developing, as the market is trading. And it's interesting, because you start to see things that you probably wouldn't have seen before that are going to help you make greater trading decisions. And what we've done with order flow is we've taken the footprint chart, right? Your normal footprint chart with the bid, offer volumes that are traded and all the other information, delta, point of control imbalances. And we said, well, why don't we look at where the volume is, I'll say the volume, but rather the value is in a bar, right? Because in the past, order flow traders would use the point of control as being the default value in a bar, but that's just really one price level, okay? And, a lot of bars trade multiple price levels. Not every bar trades the bid or the offer, right? So it's like saying, picking one price as being value, you can't, okay? Because the value by definition would be, 70% of where the volume traded in the bar. So what we've done is we've added a box around the profile, a box around the footprint to show the value area. So you can see where 70% of the volume did trade in that bar. And you can sort of see relationships to price and volume being the point of control where they appear in a bar, right? Because again, if 70% of the volume is the value, right? Again, you could adjust it. Some people say, well, it's really 68%, but 70% is sort of, the industry standard. And you can start to see how value areas get rejected by the next bar or the subsequent bars. And you can see how within a bar, like this red bar right here, price closes outside of value, right? And if you've ever studied market profile or volume profile, you understand what that means when price starts moving away from value. It's trying to find a new value area. And we've even taken a step further, and we have ways of highlighting value areas on a bar by bar basis that are important to traders, right? Because you can see how when the market starts moving away from value, it can come right back up to that value area before continuing down, how it's acting as resistance in this case. All right. Other times it's going to act as support. Now this is a red candle, so it's going to be resistance. You can see down here, again, this was this morning, right? It's a great opportunity to sell, in the 42.20s, 42, 15, 14, definitely above 42.10. The market had already been selling off anyway, but it's just, even if you're in a trade, it can help you stay in the trade longer, right? Everyone always says, oh, you got to let your winners run. Well, by knowing where value is and how price is trading relative to value, that's how you're going to let your winners run, right? That's the biggest thing that everyone says, cut your losses short, let your winners run, but they don't tell you how to do it, right? It's about reading the market. If you're still seeing bearish order flow coming in and you're short, you don't get out of the trade now. You let it run. You let it go as far as you can. And on a normal candlestick or bar chart, there's no volume information. More importantly, there's no value area information, right? This is that same move right here. This is the first bar, right? Bar 1 here. This is bar 2, okay? 856. This one came in around, 903. So you can see right here, right? That's the first bar. what was it? I think it was this one here. This was the second bar, right? And you see how yeah, and the market just sold off quite nicely. I mean, it's going down. Now again, it's not some secret thing. This information is available out there for traders. It's whether or not they want to use it. It's not like, oh, I got some secret, I got whispered in your ear or anything like that, and don't tell anybody else. Because you know what, this information is out there, and I wish more traders would use it because it would make the moves even more powerful, right? That's why I always laugh when I see people say, oh, yeah, I figured out a way to trade the market, but I don't want to give away my edge. Well, if you're the only, that's why edges decrease over time is because they're transitory, right? You may have found a discrepancy, but over time it's going to go away. But if you're using information generated by the market that's provided by the market, it's not going to go away in that sense, right? It's there. And again, what information does the candlestick give you? Well, you can see, I got this big wick up here, but all these candles got, big wicks. It starts breaking down here. But if you're looking at a footprint chart, if you know how to read a footprint chart, you can see what was happening. You can see the delta getting strong negative. You can see the point of controls going down. There's a few other things in here. There's a bearish selling tail. But simply look at the value, and you can see value is starting to migrate lower, right? And what was interesting is because now that I know where value is, I know that I had sort of formed a balance area in here, and it looked like it tried to break out of this balance area and came right back into it. Then the next bar, the value area was lower. And then even the next bar, it didn't even trade back into value. Now I know we're moving away from value. And when you start to move away from value, that's when the explosive moves are going to happen. Don't believe me? Fed day yesterday, right? We all remember that big rally. It was a monster rally. Look at this, right? I mean, I know a lot of traders saying, this market sucks because it goes up 2% and goes down 2%, in the first 30 minutes of trading. Um, you can't make heads or tails. Well, that's because you don't understand where value is. If you knew where value was, that low right here at 136, right in here, this bar, this big green bar, very bullish. And you can see that's where the move started. Came in right here after, it was trading 75 afterwards and then took off. But based on this value area, and again, I've scrunched this chart down because it's such a big move. You can't read the numbers, but you don't necessarily need to focus on the numbers. You're focusing on where value is. Okay, you can see how the market is starting to move away from value. It's drawing out this area here. So now I know I got an area of support, right? And right here. And I know when this bar is forming, that support is forming. I don't need to have the market start breaking out to new highs, realize I got support. I have support knowing where that support is as it's happening and confirmed within a minute, right? While the market is still trading right off these lows here. This morning, perfect example, even before the cash open and the big sell-off happened, I could see the value area here. I could see the value area starting to break down, moving lower, right? You can see the gap in the two value areas here. I can see this abandoned value area right here where it's not even retracing back into it. Then cash opened here, and then the move down, big move down happened, right? So this was those charts I was showing you earlier, this side right here. But it was actually starting up earlier than that. And hey, this morning, um, yeah, this was, sorry, yesterday morning, not this morning. Right ahead of the cash open. We're coming out of this sideways activity. This is a doji candle, and the market broke as soon as the cash opened, right? And it was a move from 80 down into 70, sideways, went back up to 80, and back down to 70. But these moves, they happen, using value area is something that just doesn't have to be used during the US session, during European hours. Every bar has a value area. So whether you're using it during the US cash session, during the Asian session, it doesn't matter. all you're really looking for is what's happening in value. Is the market starting to break away from value, right? It's starting to break away here, started to break away here, right? This is the European session, 4 in the morning, Chicago time, Asian hours, right? This is about, what was that, 2140, was that work out to 9, 9:40 p.m. Chicago time, during the prime Asian hours, right? You get the same moves, although albeit smaller during the Asian hours and European session that you get during the day US day session. You look for the same things. Gold, again, doesn't matter what market you're trading, whether it's E-minis, gold, wheat, corn, palm oil, heating oil, hogs, any any futures contract, even stocks also have value areas. The same analysis can be applied to the stock market, right? This is gold this morning, right? Nice moves, but you can see how we're moving away from value. This is the euro currency futures. Now, this is this morning, smaller rotations because the market isn't as volatile as the way stocks have been recently. But, when volatility picks up, you're going to have bigger rotations. So remember, the more intricate and complex the trading methodology that you have or you develop, the more likely psychological obstacles are going to develop and hinder your trading. And if you if you become confused about the data or find yourself unable to make decisions, inaction may seem like the most rational option. Meaning, if your trading system is a bit cumbersome and complex, you're going to be second guessing yourself, whether you should be taking a trade or not, and you just end up not taking the trade. Now, trading successfully requires taking calculated risks and making quick decisions. A lot of times in trading, you have to make those quick decisions. You could even read, I'm a big history buff of market history, and you can read the stories of, the guys from, the crash in 87, even the, both on the CME and what happened in Singapore with the Nikkei. It's the guys that made that quick decision to buy at the low that made a boatload of money, right? That trading often involves, especially intraday trading, quick decisions. And when I talk about trading, though, my style of trading is intraday trading. I'm not a swing trader where I could sit back over the weekend and find, a stock while I'm sipping my brandy or something like that. No, I in and out during the day. I'm done at the end of the day. So simple and obvious is always better than complex and convoluted. Order flow is the simple and obvious way. So over the last 45 minutes or so, hopefully you'll agree it's been time well spent, right? But honestly, I can't cover everything in a quick training session. Order flow is so unique. There's so much information available to traders, in terms of aggressive buyers, aggressive sellers, imbalances in the market, um, you know, just volume analysis, is something that takes a lot of time to um, learn and explain, because there's so many different little nuances, right? It's not like you can figure out trading in one afternoon. You always got to be improving. Said I've been involved in the markets for over 30 years now, and I'm always looking for new ways to view the market or improve my trading. Now I've got a special offer, so you get everything you need to know about order flow. And if you act fast, I got a very, very special deal. So it's the Order Flows Trader software, right? The software that you saw in this presentation. I mean, again, you don't necessarily need my software. If you have some software, you got to cobble together the pieces and put it together. But, it's nice to have everything in one software. And it's like taking my knowledge of trading order flow and put it into a program so you can see what institutional traders are doing in the market. Because after all, I was an institutional trader for over 20 years. But having order flow software is one thing. You still need to know how to use it, right? I mean, a lot of times, you buy software and it's just like, okay, you paid the money and now you got to sort of figure out on your own how to use it. I just don't give you the software and send you on your way for you to sort of go down the rabbit hole, try to figure it out, what certain settings meet. I provide a lot of education on how to trade with order flow. I'll give you access to my order flow trading course so you know what everything means in the order flow, and what to look for in the order flow. Normally I sell it for $297. You're gonna get it for free. But I realize, if you're interested in order flow, you really want to go to the next level and you want to go fast, right? We all like to move as quick as possible. And so I have my order flow inner circle video series, which is a collection of 56 videos on advanced order flow tricks, tips, and analysis. I'll give you access to that. Actually, you can't even buy it off the shelf anymore. You can only get it through this package. And all this together, the software I normally sell for $900, the training $297, the inner circles another $497. That's already $1,600, almost $1,700. But I realize it's one thing to learn from videos and books, right? That actually takes a lot of commitment and discipline. When I was in college, I thought I stumbled on the greatest course. It was a history course where you do all the studying. You don't go to class. You just read the book and you take 3 tests within the semester. And I thought, this is easy. And yeah, I never really did the studying, right? I never really did the learning, and I just barely passed the class. But what I've found more useful, especially in trading, is live training sessions, right? Where you could ask questions, what did you see? What were you thinking on this trade? Or even send me in, a chart that you marked up, and I could take a look at it. And it's live. I'm there every week. I've been doing this for over 3 years. It's every Tuesday night from 7 p.m. to 8 p.m. And if you can't attend, then you could watch the replay, right? Just make sure you sign up. You'll get access to the replay. So, and it's free for all the users of the software. I've done over 100, here it says 157. I think it's over 160 now. And, many of these gurus out there want to charge you extra. I've seen people charge up to $200 a month for training on how to use their software. I don't get it. What's up with that, right? If you're making an investment on buying a software to help your trading, you know, you, you want some instruction on it, right? And again, I've seen other vendors out there, okay, I'll charge you just $59 a month for the software. But then, oh, you want training? Okay, that's $1,000. What's up with that? At least this way, you have a way to reach me every Tuesday night. I'm there, right? It's interactive. Lots of times it's just me lecturing. I wish people would ask more questions, but still, it is what it is. And you can join, you can ask your questions, or you can just sit back and watch. And maybe you just got one question. I know sometimes people are a little shy, but it's there for everybody. And what I discussed today is just a sample of the forms of analysis I talk about weekly and what's available in the Inner Circle video series. You're going to learn more about order flow in the weekly sessions than you thought possible. Honestly, it's again, you can watch videos, and there's a lot of videos out there that I've recorded that other people have recorded, over the years. But really what you want is the current stuff, right? What are we seeing in the markets right now? Because the markets are dynamic. What the market you're looking at today is different than it was 3 years ago, different than it was 5 years ago. So to get started, go to orderflows.com/oft. I put the link in the chat there, so you know where to get it from. And basically it takes you to this page. All you do is you scroll down to the bottom of the page. There's some videos, if you want to learn more about the software, you can watch it. And after you do that, right, it's going to take you to the buy button down here. You just click on that button, right? And you can see what you're going to get. Right? You're going to get the Order Flows Trader software, trading courses, access to the live weekly group trainings, and I got a special bonus, which I'll talk about in a second. So you just click on that button, and it takes you to PayPal. Okay, now it takes some time for PayPal to process your information and for us to generate all your user logins and everything. We try to be as quick as possible, but sometimes it can take a few hours. But you should get it relatively soon. And just bear in mind, everything is sent to your PayPal registered email address. Okay, so make sure you check your spam folder, and if you haven't updated your PayPal email address, you should. Because that's where it's all sent to. And again, if you don't get it within 5-6 hours, just drop me an email. And again, it's just a one-time payment of $749. So you're not paying $1,600, $1,700 for it. It's just $749, right? You're saving over $1,000. So go to orderflows.com/oft5.html. There's no more recurring payments. There's no more other payments in the future. Like after, yearly, people sell a yearly software, then a year later you get a charge, you call from message from your bank. Oh, your overdraft because they snuck in a new payment for $1,000 or something for their software. No, that's it. It's just a one-time payment. Now you will need to pay your data fees, right, and your NinjaTrader fees because my software runs on NinjaTrader 8. As a special bonus, I'm going to give you access to the order flow playbook, which is a trading course, a more advanced trading course on order flow. And in it, I even discuss an additional 10 or 11 trade setups that you can look for. Because again, the order flow information is so robust. There's a lot of different ways to look at it. And really, if you're using order flow, you need to know what to look for. Trying to figure it out on your own, it's going to cost you a lot of time. And more importantly, it's going to cost you a lot of money. And normally I sell that for $297, but you're going to get it for free. Okay, so you're going to be getting a lot of stuff here. Go to orderflows.com/oft5.html. So you're going to get the Order Flows Trader 5.0, which is the current version. It's valued at $899. You get access to the Order Flow Trading Course, which is the value is $297. The Order Flows Inner Circle video series, which is worth $497. You're going to be able to join the live weekly group trainings. Again, I don't want to put a price on that, but to me that's the best way to get up to speed as quickly as possible. And you get access to the order flow playbook. You get all that for just a one-time payment of $749. Now, if you stuck around and you want my book, go to orderflows.com/book.html. You have to write the .html afterwards. And I'll take you to the page. Just enter your name and email address and hit submit. And it'll take you to a page with another video on it as well as the book on it that you can download. Again, it's a digital download. You're not going to get the hard copy book. So to get started, you go to orderflows.com/oft5. Now again, it's, what year are we? 2022. It's May already. My goodness, this year is flying by. And you got several options. You could do nothing. That's fine. I don't want to twist your arm. You stay right where you are right now. And, you just, think you're going to become a better trader by yourself. Okay, there's nothing wrong with that. But, it takes a big commitment on your part. Or two, you can take what you learned here today, watch more my videos, other traders' videos, and do a lot of trial and error. And after a few months, maybe you're lucky, maybe you start to see some positive results. Maybe you don't realize what you're doing, the mistakes that you're making, and it was a bit of luck. Or maybe you did pick it up. I mean, some people are able to pick it up by watching videos and reading books, but the best way to do it is allow us to take you by the hand and walk you step by step through each part of the process. Skip that trial and error part, right? Because the worst thing you're going to do is not just lose the time, but lose money, right? Time, they say time is money, but if you have no money, all you got is time. That's one thing, but I'd rather have more money in my pocket than time. I don't know. That's just me. But if you do the work, right? If we work together, you'll watch as your life and trading transforms right before your eyes. So figure out which option is best for you. So again, get started by going to orderflows.com/oft5. And again, I put everything in the chat for the book as well as to get the software. I got some time here. I'll just go through a couple minutes, a couple questions really quick here. How long is the offer good for? It's good for a while. I mean, honestly, I've had it at this price since COVID hit, and I haven't changed it. Can it be used for trading with options? Well, I trade futures. I'm a futures guy. I'm from Chicago. Obviously, you got the big futures exchanges in Chicago. That's where I worked. That's my background. Can you use it with options? I don't use it with options. I don't know if anybody does. I haven't met any trader specifically that trades options. I know I have users that also trade options. I don't know how they've incorporated in there. I haven't asked. I don't use NinjaTrader. Is the training unbundled and still of value? You know what? If you have other software, if you have Sierra charts, because I have people that buy my training, right? If you go to my website, you go to orderflows.com, there's a link for the training, like the order flow trading course. And if you buy that, I do include a few of the other courses, like the playbook and a few other ones. So there are users that have just bought the train because they already have order flow software, either through Sierra Charts or was it Atas or something, and a few of the other ones, and they just really wanted to get up to speed on order flow without making that jump into NinjaTrader. So you could get the courses by themselves on my website. Now, so the first question, does the approach work on for swing trading? It, Okay, swing trading, it depends. I meet swing traders who are intraday swing traders, and I meet swing traders that are, more longer term, meaning, a day or two or three or even longer. Order flow is best used on an intraday basis on a short time frame. Okay, because, what happens in the market right now affects what's going to happen in the next few bars, right? I mean, sometimes, beginnings of trends, it helps you find, but again, sometimes finding something in the order flow, like yesterday, right, at the Fed, um, after 30 minutes after the Fed announcement, market reversed and went up, and the signs were there in the order flow. Okay, now that's not to say that that trend is going to go to infinity. Obviously, you still need to read the order flow as it goes, looking for that confirmation or looking for things that have changed in the order flow to become bearish. Okay, like this morning, right? The market was pretty quiet, a bit quiet, a bit scary, overnight how quiet it was. I think people were in a bit of shock on that big rally yesterday. But then this morning it's become very bearish. Okay, now, my time frame is just, intraday. I rarely hold trades for more than an hour. So can you use it for swing trading? Yeah, if you're more of a shorter term swing trader, an intraday swing trader. If you're someone that's going to be holding it for 2 or 3 days, probably not, right? I mean, like that bottom yesterday at 136 in the afternoon, by the end of the day, it's, the order flow is done for the day. Now you got to reassess it for the next day. So I don't know if that answers your question or not. So all right, everybody, thanks for attending, and I'm happy to answer your questions. Trader, the page doesn't allow you to fill in your name to download the book. It should. I just checked it earlier, actually. But if you're having a problem downloading the book, I'll just write something here in the chat for you. So email me. It's just mike@orderflows.com. Put something in the subject line like I want your book or something, and I'll just reply to you with the link. So, all right, everybody, thanks for coming, and thanks for taking the time out of this day. Today was a very strong moving day, so it's time to get back to the market. So, thanks, everybody, and I'll see you guys later.